London gold emptying, what's the real cause? Hi everyone and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto and the Gold and Silver Standard. Today welcome back Sam, who's been looking at a topic that's really caught my attention recently. It seems to keep coming up that we have had gold moving from London to the US. Very interested in the reasoning behind this and what's actually going on there. How are you going today, Sam?
Great, Chris. How are you doing?
Not too bad at all. As I said, I'm really interested in this one because it seems to be happening in quite significant numbers. Can you maybe just step us through what you're talking about here, what is actually going on, and then potentially why that might be happening?
Yes, so there have been a lot of headlines referencing the tariffs having a potential effect on this. And one thing a lot of headlines and some analysts have been putting out is that people are potentially worried about a tariff on gold coming into play or on precious metals. So people want to quickly redeem that gold before they get something like a 10 or 25% tariff slapped on the redemption of their gold. Now that sounds like it makes sense, or does it? Because to me, that makes absolutely no sense. In fact, it would be nothing short of insane. And one reason for that is, on the first point, gold's a monetary metal. It's money. So it's not subject to commodity tariffs. It's not a country's industrial product like soybeans. Number two, the U.S. specifically labels gold as duty-free. So it doesn't make sense to tariff that money. Taxes on money, for example, if you just think in terms of personally, if you went to a 7-Eleven with a $100 note and said, hey, could I change this for $250s? They wouldn't put a tax on that. It doesn't make sense. You're just moving money, really. And then lastly, and the biggest point would be, why would the U.S. impede the flow of gold into the U.S.? That just doesn't make any sense. So a country is saying, I don't want gold, and sanctioning themselves. That's something a country does to an enemy country. If they're trying to move gold into the country or cash or wire money into the country, they would freeze that from going into that country, even if it's not their money, because they don't want that country to have any money. So if the U.S., if Trump said, I don't want the U.S. to have any gold, any more gold, that would be just truly insane. You can look at even the countries who have held gold in the U.S., like Germany in the past, and then they said to the U.S., hey, can we have our gold back? We'd like to claim it back. And the U.S. said, sure, we'll get right on that. Give us a few months. And Germany said, wait a minute, what? Where is it? Eventually it was all sorted out, but you can see no country would reject having gold come in. It would be insane to tariff that. Now, let's look at the reality of what has happened. So the Bank of England's delivery of physical gold is always 2 to 3 days. Now, it's 1 to 2 months. So if you were claiming your gold from somewhere and you expected it in 2 to 3 days and they said, actually, that'll be a month or two, what would you be feeling? What would you be telling your friends who also think they have physical gold? And then, I can't guarantee this, and I'm not saying that this is the case, but what's happening now has all the hallmarks of a supply issue.
That's a very interesting take because, and it's different, and you were highlighting that, it's different to other takes that I've been seeing on this because the concern was really around whether there was actually going to be some sort of tariff action there that would impact. You've highlighted why that really wouldn't make any sense. I suppose my only pushback on that people would say would be it doesn't make any sense, but probably none of this, the tariffs make sense in that regard, where you go, if you were looking at the US, why would you tariff your closest allies and largest trade partners versus your enemies, for example? So I wonder whether part of why people get confused around this is because everything's kind of up in the air. I've been describing it as we've had sort of these, it's almost like hand grenades of disruption and volatility thrown into some of these markets where people really don't know what to expect because it's very different to the order that was in place before, like the world order as it existed prior to that. So is that part of what's potentially going on here? Because I do want to get back to that supply side of it as well. That's a really interesting angle. But is that part of why maybe people are overreacting because they just don't know how to interpret what's going to happen next?
Well, I think the people who are claiming their gold, they know what they're doing. So, for example, Goldman Sachs thinks that for every 5% increase in tariffs on just China, for example, that they'll lose 1 to 2% earnings on shares, in the S&P 500. So that's a reason, that's an incentive to get out of certain investments and go into an investment which isn't going to be, at the mercy of these tariffs. And then you have, tit for tat trade wars developing across most of the developed world. That's going to be a push for de-dollarization. That's not what Trump wants, but that's what can happen. Countries are going to want to de-dollarize and get away from U.S. influence. So that's a downside, but that's good for gold. And then thirdly, it's a lot easier to invest in a metal, which has no nationality. It can't go out of business. It's not something that just one country produces. It's not like China has a gold factory, like a toy factory, and they're churning out all of it. Gold can flow internationally quite easily. But it could be the opposite of what a lot of headlines are claiming, that gold might not be the victim of potential tariffs. It may be one of the only beneficiaries. And then the gold price repeatedly breaking record highs supports that hypothesis. So if this is a supply issue, all there needs to be is a spark to set off that kind of supply panic. And nothing like a global tariff war would be the thing to actually set off a panic about, is there enough gold to satisfy what I think I have?
And that is the real, to me, the most important point. We've argued this for a very long time, and people in this space have argued this for a very long time. The physical just isn't there. You've highlighted already, it's months to be able to get redemption on this paper backing that exists in some of these markets. If we do see a rush of people going in, and I think this is what you're getting at with the supply angle, and we don't have the supply available, it would be an easy target for something like, and I get this is the opposite of what you're saying in terms of the tariffs, but it would be an easy target to disrupt that market quite a bit by just throwing any sort of, not even call it tariff, any sort of political roadblock in the way of people getting their gold. I mean, let's not forget that's ultimately what happened with the closing of the gold window, where you could redeem your gold for dollars way back when that happened. So there is political risk here, isn't there, that something could actually happen, particularly under a stressed redemption situation.
Yes. There is political risk. And look, I'm not saying it's definitely just a supply issue. People aren't scared they'll have trouble receiving their gold for something like even tariffs could harm supply chains. I mean, if it makes it more difficult or it takes longer to get your gold, okay, you'd want to get it now before it becomes maybe more time consuming to get. I'll give some credit to that. But ask yourself a question. If Trump and the U.S. administration got a call today and everyone in the world said, look, can we hold all of our gold in New York and you look after it for us? Do you think they would say, no way? Or look, if you want to do that, we're going to charge you a 10 to 25% tariff? Or do you think they would say, that is a fantastic, phenomenal idea. Send it right now. We'll take good care of it for you. give us all that physical gold. Which one do you think they would do? That's my only question.
When you put it, don't bring logic to an argument on politics, Sam. But when you put it that way, it does make a lot of sense. That is really, people are looking at that incorrectly in terms of where they believe the risks are. Probably myself included a little bit there. I think I'm just concerned that something that, because it hadn't been on my radar at all, even the potential that there was an issue about where this gold was stored. And now all of a sudden, the fact that that's a point of discussion brings a lot of attention to it that previously wasn't there. So it's certainly an interesting thought experiment to think about what happens when the jurisdiction of gold starts to matter all of a sudden, because it hasn't for such a long time.
Yes, and even London's trying to dismiss this, saying, oh, why does it matter anyway? The gold standard's gone. They're basically writing it off. If they're writing it off, you should probably tell the central banks who are buying up so much gold, and you should probably tell all these investors with billions of dollars that they've made a big mistake, and they should convert it all to fiat, because that's essentially what they're arguing.
I think
anyway,
they might get a little bit of pushback on that argument, as we all know. Well, look, absolutely thoroughly enjoy that conversation, and I want to keep an eye on what's developing there, because it is something that's really caught my interest at least. So thanks so much for your work on that, Sam.
Thanks, Chris.
Thanks everyone for watching. We'll chat again soon.